Aloha, I'm Lahaina Lee, and welcome to the Maui Real Estate Advisor series on buying, selling, and investing in Maui real estate. Today's episode is part of our 1031 exchange series, and today's topic is a question I get all the time. Can I do a 1031 exchange with my vacation home? And like any good real estate advisor who's been around the block, my answer is, well, it depends. Let's unpack that. What do you mean by vacation home? Because what you mean and what the IRS means may be two different things. Are we talking about a property you use strictly for personal enjoyment? There's no rentals, it's just a place you go to escape, recharge, or maybe have family barbecues and watch sunsets. Or are we talking about a short-term vacation rental that's an Airbnb, a VRBO, or professionally managed condotel that you rent and earn income on and file taxes on? Oh, and maybe you go to it once in a while, to check on the property, make some repairs or upgrades or, etc. That distinction, that's everything. If it's strictly for personal use, your tax advisor is likely going to say, no can. It doesn't qualify for a 1031 exchange. And if they say no, you should probably listen. In fact, you should probably discuss what you're planning to do and come up with a strategy before you start your next adventure in real estate. Plus, you're paying them for advice. If your vacation home is legitimate rental property, meaning you collect income, file rental income on your taxes, and limit your personal use, you're likely going to get the green light. And that's when the 1031 exchange becomes a very powerful tool for building wealth and creating part of your own legacy. Now, the question arises, why would you ever exchange into or out of a vacation rental? Well, first, before you exchange out of your vacation rental, you have to have acquired one, right? So why do people exchange into a vacation rental or even buy one to start with? Well, a lot of real estate transactions get set in motion due to some kind of change. The first vacation rental property I bought wasn't an exchange. I had just graduated from college, got my first real job. It came with a company car. So I sold my college mobile, took that money, made a down payment on a ski cabin in Tahoe. So you can see there were a lot of different kinds of changes happening all at once right there, right? And something we see here on Maui is that a lot of our buyers already have other properties on the mainland. And a lot of the time, the property they've owned for years, and it's been a workhorse. We have clients who've owned warehouses, college housing, retail commercial space, or just regular residential rentals, you name it. And maybe these properties have all been good, solid investments, performing assets, but not usually fun assets. Lots of times, those assets come with a lot of work and worry. And some of those lucky folks have been able to come to Maui. Maybe not as much or as often as they wanted to. Many have always dreamed of owning their own place here in the islands. Then one day, something changes, and they realize their dream can come true. There's that change thing again. Maybe the kids have just finished college, so they're not forking out tuition anymore, or they've become empty nesters and they're free again. Maybe one or both of them, assuming it's a couple, have retired and they want to spend more time on the islands and less time tending to a real estate asset that doesn't have fun as part of the ROI. And just a note right here, when you're evaluating a vacation rental property, you need to be able to look at all the benefits of owning that property here on Maui and recognize that bundle of value. Because in many cases, especially if you're using the property yourself, you're not going to be getting the same pure ROI as you're getting on a mainland property. This might be an example. A few years back, we helped Donna and Mike, a soon-to-be retired couple from the West Coast, exchange a commercial property they'd owned for years into 5 condos here on Maui. And 1031 pro tip, Yes, you can exchange one property into multiple replacement properties. And with four children spread out across the country, some married with their own families, Donna envisioned a gathering place where each family could have their own space and still come together for meals and making Maui memories. Her goal? Not just rental income, not just the ROI. Part of her goal was the legacy of each child inheriting a condo on the stepped up basis, free of capital gains. So when she calculates this ROI, she includes connection, joy, and the future of her ohana. And that's what happens. Life changes. As a property owner, you're tired of tenants, toilets, and trash, and you want a fun investment, or as I call it, a lifestyle investment. A property where you can make memories with the kids and the grandkids, relax and recharge, or maybe even the place and the property where you want to live forever. If that sounds like you, maybe owning your own place in paradise, whether it's here or somewhere else, is worth exploring. Imagine what it could be like to spend more time here, maybe bring friends and family, or maybe even have a business retreat. Talk to your tax advisor about the business trips you might need to make, to check on your investment. That's what happens. And the same thing happens in reverse. We have clients who have owned for 10, 15, 20 years, and now they don't use the property as much as they used to. The kids and the grandkids, they don't have time to visit as much anymore. Grandkids, they get busy with sports and school, and the parents are busy, and life happens. The fun factor and the ROI just isn't what it used to be. And life is changing. So the property has served its purpose. It's appreciated. And maybe, especially at a new higher value, it can perform better or meet a different need somewhere other than Maui. And for some of us, as we age, travel just isn't that much fun anymore. So we just don't even want to get on a plane and go. So maybe there are just better opportunities elsewhere. And it's time to move that asset closer to home. Perhaps another vacation property at a closer beach or a lake or a ski area, wherever you like to escape to. Some of our clients have sold here and bought a rental house for one of the kids to live in or some college housing for a grandchild. That could produce some income now and be part of that heir's inheritance. We've had clients who've owned multiple properties here on Maui and they weren't seeing the income that they used to. And they decided to sell here and wound up buying multiple properties in Texas or even in one case, a small commercial property in the Carolinas. So those are some of the motivations we see, but how do you actually do it and what are the rules? Well, here are some of the rules and the rules of thumb that you want to keep in mind. Discuss these with your tax professional. If you're selling a vacation rental property that you currently own and want to 1031 exchange that into a new property, you want to make sure it qualifies. So some of the rules are very clear and some are shades of gray, which I'm told is an accountant's favorite color. You should probably check with your CPA on that. But here are some of the basics. One of the common rules you hear is that you must have owned the property for 2 years. Now, 2 years, what exactly does that mean? Does that mean 24 months? Does it mean 2 full years? Or does it really just mean 2 tax years? Talk to your CPA. You must have rented it at fair market value for 14 days in each year. Your personal use has to be limited to 14 days or 10% of the rental days, whichever is greater. So let's say you rent it for 200 days a year. 10% of that is 20 days. So you get up to 20 personal days use. Now, the same rules will apply to your replacement property. If you plan to buy another vacation rental, you want to plan to hold it for at least 2 years, rent it for 14 days a year, limit your personal use to 14 days or 10% of the rental days, whichever is greater. And your personal use, well, that includes you. It could also include just your family staying there without you. It could include friends who are using it for free or at a discount, even swapping time for another property with another property owner or bartering for other services. Unless you're charging fair market, it's considered personal use. So why does that matter? Because if your use exceeds the limit, the IRS may reclassify your property into a personal residence. You could lose your tax deferred status, and it could seriously limit your deductions. Well, what if you don't rent it out at all? Well, then it's considered a personal residence and not a rental. You can't deduct rental expenses. You can't do a 1031 exchange. You might be able to deduct some of the interest and property taxes, but that's between you and your CPA. This is not tax advice. Bottom line, if you want to maximize the benefits, you've got to treat the property just like it's a true investment. We sell a lot of vacation rental properties. So when we counsel people contemplating selling something that's an investment property, we always ask, are you considering doing a 1031 exchange? Selling a property without doing an exchange can result in you owing a significant chunk of the proceeds to the state and the feds in capital gains taxes. With a 1031 exchange, you can defer 100% of the gain and reinvest all of the proceeds into something that will, with any luck at all, bring a return instead of paying all of those taxes. The money's just, gone. So if you're planning a 1031, you want to know the rules, plan your timing carefully, and work with a tax advisor and a qualified intermediary and a knowledgeable realtor. That's where we come in. Now let's talk strategy. We help clients all the time figure out, does your property qualify? What's your ideal replacement asset? There may be more options than you ever even thought about. Should you keep an investment on Maui, invest on the mainland, or mix both? And we'll be thinking about your goals, first aligning them with your financial goals and your lifestyle vision. Because let's face it, ROI isn't just about the money. Sometimes it's all about fun, freedom, and flexibility. So the question of the day was, can you do a 1031 exchange with a vacation home? Yes, you can, but only if you treat it like a real investment property. If you're thinking about repositioning your real estate portfolio, especially here on Maui, let's talk. Our team can help you figure out the smartest next move for your goals, your taxes, and your lifestyle. Thanks for watching. And if you have comments or questions, drop them into the section below or shoot me an email. It goes to lee@alohapots.com and I answer every one. And if you liked this one, give us a like and maybe send this episode to someone who's thinking about a vacation rental property. And if you haven't already, subscribe to make sure you don't miss a thing. From the greatest island on earth, this is Lahaina Lee saying aloha.